Welcome back to the channel. Today we are going over a very important topic. Okay, this is not just technical analysis. This is for everyone who is getting into crypto trading. All right, if you're new to crypto trading, you need to watch this video. This is going to go over the dangers of leverage trading, and in specificity to crypto, I'm going to talk about flash crashes. In particular, the recent Kraken flash crash, and that flash crash affected a lot of people, and you need to understand why, because at some point, if you're getting into crypto, you're going to get introduced to leverage trading. You're going to want to try it. I did it, and I stopped doing it. I made a little profit on it. I lost a little bit of money on it, and overall, I broke roughly even, and I decided this was not the thing for me to do, because once I understood the risks, I realized it wasn't worth it. So this is a very important video. Make sure you watch it till the end. Make sure you like, make sure you subscribe, and check out some of the technical analysis videos that I'll be posting. The next one's going to be tomorrow, along with a live stream on Twitch. You can go into the description and follow me on Twitter and Twitch as you please, but make sure you subscribe and like. Let's go ahead and get started. Now, the first thing that you're looking at on screen here is you're looking at an image of your money flying away. And that's because that is what happens with leverage trading if you do not know what you're doing. So you need to be very careful with leverage trading, and there's a few things that we need to start off by going over just to give you a good understanding of what it is. All right, so the two terms that we can really use here are margin and leverage. So when you're trading on margin or when you're trading on leverage, you're trading with money that you don't actually have. You're borrowing money. And what's interesting is with crypto, if you're trading on a site like Bybit, you can go up to 100x leverage, meaning that you can borrow up to 100 times the amount of money you have for your trades. But it works differently than in stocks, because when you're borrowing money on margin for stocks, like if you're on E-Trade or Ameritrade or some other trading platform for stocks and you're borrowing on margin, you're normally not in as big of a risk factor as you are with crypto, because on crypto you can trade up to 100x leverage, right, with a very small investment. On those other platforms where you're doing stocks, you normally have to maintain a certain balance in order to trade with margin. So you're not even gonna, for the most part, be able to trade on margin unless you have $25,000. But with Bitcoin and with certain other assets, like if you're on Bybit or even Kraken, I don't know actually if Kraken has a minimum, but I know that Bybit doesn't. So on Bybit, you can transfer any amount of Bitcoin there and you can trade on leverage up to 100x, which is insane. Because once you understand the risk of it, you start to realize that this may not really be worth it. So the first thing that we need to understand is how exactly does leverage trading work? What does it really mean? So let's just say that you have $1,000 and you're going to go long on Bitcoin at 10x leverage. Now, what does this mean? This means that you're going to bet your $1,000 that the price of Bitcoin is going to go up, and you're going to do it at 10x leverage. 10x leverage means that your $1,000 is what you're investing, right? That's what you own. 10,000 is yours. You are borrowing 10x, right? 10x is the total that you're going to bet. So that means your total bet is 10 times 1,000. 10 times 1,000 is 10,000. So 1,000 is yours, 9,000 is borrowed, and total equals 10,000. That's what you're actually going to be trading with. That's what your trade is going to be worth. It's going to be worth 10,000. Now, the interesting thing is here is to understand how the percentages work. Okay, if you're borrowing $9,000 and your initial amount that you're putting in is 10x, and you're going, or I'm sorry, your initial amount you're putting in is $1,000, and you're going 10x leverage, and you're doing a long. So long is when you're betting that the price is going to go up. Going short is when you're betting that the price is going to go down, right? Now, basically, if you were to make money on this trade, you're going to receive the Bitcoin that you make, right? You're going to earn Bitcoin. You're betting your Bitcoin. You're betting $1,000 worth of Bitcoin, and you can earn Bitcoin if your trade works, if it goes up. Now, the issue with this is the risk factor involved. It means that for every 1% the price goes up, you are actually up 10%, right? Because you're 10x. So your 1% goes up, you're up 10%. So in that same sense, if the price goes up 100%, So 100% the price goes up, you're now up 100%, right? So I'm sorry, that's even more. You're up 1,000%, right? Because it's 10x. It's 10 times that amount. So that you can stand to make pretty big gains here. Now, if it goes up 10%, 10 times 10 is 100, you're up 100%, right? It goes up 100%, you're up 1,000%. That's how it works. But once you look at it the other way, you start understanding the risk. If the price goes down 10% or 1%, you're now down 10%. So for every 1% the price drops, you're down 10%. So that means if the price goes down 10%, you're down 100% and you are liquidated. When you're liquidated, that means your trade is closed and the initial $1,000 you put in disappears. It's gone. The $9,000 you borrowed goes back to the company and or goes back to Bybit or whoever you're borrowing from. And they also receive the fees. So you're not only paying fees for the trade, but you're also putting yourself at a significant risk as far as the percentages go, right? If it goes down. And for the most part, Bitcoin and these other assets are so volatile that when you're betting on leverage, you can stand to lose a lot of money. Now, the other interesting thing is that you can trade up to 100x leverage, okay? Now, this is just to show you how it works. You can trade up to 100x. So in this scenario, $1,000 is yours, okay? What's 1,000 times 100, right? That's 100,000. So that means your total here on the right goes up to $100,000, okay? Now, if it goes up to $100,000, that means that you have borrowed 90,000, okay? Now, what this means is at 100x leverage, that if the price goes up 1%, okay, you are up 100%, right? Because 1 times 100 is 100, right? So for every 1% the price goes up, you're up 100%. It goes up 2%, you're up 200%. That's 100x leverage. Now, keep in mind the downside here. If the price goes down 1%, you're liquidated. You lose everything. So the price drops 1% and you are 100% liquidated. You lose your $1,000. Now, this is why it's very risky, because Bitcoin can go down 1% or go up 1% in any amount of time. So can all these other assets. We see it all the time. So first, you want to understand the risk you're putting in when you're trading on leverage. If you ever decide to trade on leverage, you should never trade at 100x leverage. Never. The maximum that you should ever do, if you're even playing around with this, is 10x. I wouldn't do any more than that. Some people say that you can do up to 15x, 20x. I wouldn't recommend that, because for every 1%, then you're going up either 10 or 15% or 20%, right? Whatever X your leverage is at, that's how much every 1% is worth. So if you're going 20x leverage, that means that every 1% is 20% for you. So if you're doing 10x leverage, then at least if it goes down, 5%, you're not liquidated, right? It goes down 5%, you're down, 50%, 5 times 10. So that's kind of how leverage trading works as far as the percentages go. Now, the next thing that we need to understand is we need to understand what is a flash crash, because this is a very, very interesting topic. This is the key thing that we're going to talk about, because this is the main danger of leverage trading when it comes to crypto. Okay, so the first thing is what happened with Kraken. Okay, when we saw the Kraken flash crash, if we even just look that up, right? We type in Kraken flash crash. All right, you can see here, there's a lot of articles about this, and many of them will have this chart. So this is what happened on February 22nd, 2021, last month. You see here, this is Ethereum, right? The price of Ethereum was trading at around 17 to 1800, and between 9 and 9:30 a.m., the price dropped all the way to $700. But that never happened on other exchanges. Why did it happen on Kraken? Well, when it happened, a lot of people lost all their money. Let's read some of these, okay? This is a subreddit called Kraken Flash Crash. Now, I started following this when this happened a month ago, and I talked to a few of the people that are in this subreddit, and I told them I'm going to be making a video on this and telling other people what to watch out for, okay? So we're going to read this first paragraph here. It says, please understand this though. From our perspective, many large and small account holders with even mild or very safe margin positions were instantly and immediately liquidated this morning with no ability to make trades or change their positions or even access the Kraken servers for a time. In previous instances where there have been technical issues or small immediate drops of 1 to 5% in the market, trading and margin liquidations have been halted. In this case, many users like myself have seen their entire accounts worth anywhere from hundreds to hundreds of thousands disappear in an instant. My account is worth greater than $200,000 with significant amounts of Ethereum, various other coins, and fiat US dollars. The total value was just shy of $200,000 just before the events of this morning. Within a single minute, after I could access my account again, I saw that Ethereum had artificially dropped 50% and ADA had artificially dropped 90%, to name just 2 coins affected, and my entire account was liquidated. Looking at my history now, I can see that at 7/18/30, a buy of 5 ETH at $1,600 was filled. Then barely a minute later, 7/19/48, everything was liquidated. All of my ETH was liquidated at prices from $817 to $837 at the exact same second. So in the span of a minute, a Kraken server error or liquidity problems or whatever was the issue goes haywire to an unprecedented degree, and my entire account is stolen from me. And that's exactly what this is. This is basically this guy's entire account was stolen from him because it wasn't any fault of his own other than trusting an exchange. That was the fault. And the fault is something that no one really knows is that big of a risk, but it's a huge risk. Trading on leverage, the percentages I went over before, that's one risk when it comes to crypto. That's one risk that if you're trading at 100x, a 1% move down can liquidate you. That's a huge risk. What's even a bigger risk? That you can be trading at 10x leverage or 5x leverage, and you can still get liquidated in a second. If there's a server issue, if there's something going on that exchange, you can get liquidated. And this has happened to other exchanges outside of Kraken as well. But I'm going over Kraken because Kraken was the most recent one. Now, staking on Kraken, that's not really a big risk as far as I can tell. You know, as long as you trust the exchange with your money, if you're staking Polkadot or something else there, you're not going to experience this type of risk. When it comes to leverage trading, if the exchange itself has an artificial price drop that doesn't match the rest of the market, you can get liquidated. And guess what? The exchange is not going to cover that. They are not liable because in their terms of agreement, in their user terms and all that stuff, when you're accepting the risks of leverage trading, they tell you there that any failure or loss of money due to technical server errors or anything else within the site is not their responsibility. So any money that you lose through no fault of your own, but because there was some issue with the exchange, they don't have to give it back to you. That's a big risk, and that's what happened with this flash crash. So we'll go down and read a couple of more before I go into this a bit more. This guy, Mr. Cadillac 74, he says, I lost almost $28,000 in an instant. I'm not a whale with tons of money. That money was lost. That money was almost all the crypto I owned. I saw a big dip coming, so I was trying to get in and close my position while I was still in big profit, but I couldn't execute the trade and it kept kicking me out of Kraken. I repeatedly tried to get back in, and when I finally did, all my positions were liquidated. Then I looked on the other exchanges and noticed that none of them went down anywhere near where Kraken did. He's talking about the price. So the price on Kraken went down much further than everything else. Most other exchanges had a little bit of a drop, a few $100s, maybe like $100. Kraken had like a 50% drop. So he says, if I did my trade anywhere else, I would have not lost all that money. I will be more than happy to go into a class action lawsuit if that's possible. This guy, Prius 87. He says, a friend and I lost 10,000 between the two of us, 100% of his account and 67% of mine as a direct result of Kraken's connectivity issues. I attempted to connect to Kraken to reduce my exposure at approximately 9:20 a.m. when I saw that Kraken's ETH USD quote was below 1600, but was unable to because the servers went down. I received a margin call by email at 9:26 a.m. after I was liquidated, and the liquidation notice an hour later. Truly ridiculous if Kraken doesn't rectify this in some way. The next one, from Fight for Moonshots. As a result of the Kraken flash crash, all of my ADA holdings were liquidated and I was unable to log on to Kraken to reestablish positions. Their connectivity issue resulted in a loss in excess of 70,000 US dollars. Absolutely ridiculous. Edit on February 23rd. He said Kraken support responded to my ticket overnight requesting my patience while they investigate. This is almost certain to result in no material change but in a full defense of their platform. Thus, I think other pressures are the better option. I agree that social media campaigns and attorneys are our best bet. Lost almost 50K. This is Smoothie Boof. He says, lost almost 50K after liquidation of my ETH and Link positions, took all my Ethereum, US dollars, and Bitcoin, and I currently have 170 DOT staked. They say I'm negative 4K and some change. So if I pull my DOT from staking, will they take that? They will take that too. I had about 80% of my entire assets on Kraken. Thought they would be more trustworthy choice than Coinbase. Now, this is the problem, right? For a lot of regular trading, if you're just buying crypto and you're buying it on an exchange like Kraken or Coinbase, you're pretty safe. And then especially if you're moving it onto a cold wallet after some time, you're pretty safe. But when you're trading on leverage, if there's a flash crash like this and you're on margin, what's going to happen is what I showed you with the percentages, right? If you're trading on leverage and the price artificially drops, right? Let's say you're on 10x leverage and the price artificially drops more than 10%, you're done. You're going to lose everything. So why would you want to do that? Why would you want to take that risk? It doesn't make sense, right? You stand to only make money if A, you're right about exactly what's going to happen with the asset, and B, if you completely trust that the exchange is not going to have any issues. And unfortunately, we can't trust that. This was a month ago. If this happens on Bybit and there's so many traders on there, a lot of traders would get liquidated. A lot of people got liquidated on Kraken when this happened. This is why I want you to be aware of this, okay? Now, another thing to keep in mind is that these flash crashes, we don't really even know what causes them. We still don't have any clear information on what exactly caused the flash crash with Kraken. But if the Kraken price can artificially drop that much and you can lose all of your holdings because of what I showed you with the percentages, what we went over here, imagine if you were going 10x, right? If you were going 10x, that means that you are in this scenario again, right? 9,000 is borrowed, and you have borrowed a total of $10,000, right? That's the scenario you're in if you're going 10x. Now, if the price goes 10% down or more, you're liquidated. So even if the price doesn't go down 10% on every exchange, if it just goes down on your exchange, in this case, Kraken, that's it, you're liquidated and you can't do anything about it. So you really, really have to be careful because this is one of the biggest dangers of leverage trading that nobody knows about or talks about because A, people don't think it's going to happen, and B, the exchanges are covered in their terms of service so they don't have to pay you back, and C, why would anyone publicize this? The exchanges don't want this publicized, but you need to know about it. You know, this is something you have to be aware of, and it's one of the main reasons that I don't leverage trade because even if I'm right about the price of the asset and I do well, there's no way to bet against an error on the exchange servers or whatever happens. I mean, this could have been two things, right? There could have been there obviously was some issue going on with Kraken at the time because people could not log in. They couldn't even get into their account to close their positions. Now, on top of that, if the price dropped artificially, that could have been some type of server issue. Maybe orders weren't going through and the order book was completely open and then suddenly someone did a market sell and there were not enough buys and the price just dropped, right? Or what could have happened is someone did a really big market sell order and there were not enough buy orders on the order book, maybe because people couldn't log in. So people couldn't log in. There's not enough buy orders on the order book. Somebody wants to dump a bunch of their Ethereum or ADA or whatever. So they hit market sell. And suddenly all the buy orders that are there get filled. And then the price crashes way further, like 50%, right? Because now there's no buy orders to buy up that supply of the asset that's being dumped. So that could be a reason why this occurred, right? It's very possible. People can't log in, they can't put in buy orders. And then suddenly someone who gets in or is still in puts in a massive sell order, crashes the price, there's not enough buy orders to buy it all, and the price drops so low that someone who put a buy order down at $500 or whatever and just left it there, they get their buy order filled. But anyone who's trading on leverage and they're long, they're pretty much all going to get liquidated. So keep that in mind. It's a very, very big risk. Flash crashes are probably the biggest risk because a lot of people experienced it. You can go to the Kraken flash crash Reddit and you can read the stories. Those people, some of them might have been great traders. They might have had good gains over time, and a lot of them lost everything in 1 second. A, they couldn't get into Kraken to close their positions, and B, as soon as that, drop happened, that's it. They were done. They were liquidated immediately, and there was nothing they could do about it. A class action lawsuit, it's one of those things that you don't really know what it's going to turn up, because at the end of the day, the exchanges cover themselves in their terms of service. So a class action lawsuit may not even recover much, but I hope it does, because the people that lost their money due to this, they deserved better. I mean, what Kraken and other exchanges should do is they should be monitoring a market aggregate price, right? Let's say that the aggregate price of Ethereum or Bitcoin is at a certain level across all the exchanges. Let's just say it's Ethereum and the price is $1,700 across most major exchanges. Then what any exchange should do is they should be doing like checks every few seconds against this market aggregate data. And if the price on their exchange drops more than 10 to 15% of the market aggregate, or maybe more, maybe 20, 30%, whatever that percentage might be, they should halt trading. That way, not everyone's going to get liquidated. They don't seem to do that. So I don't really know what the rules are for things like that, but it's definitely something that we should all be aware of and you guys should know about. Okay, the next thing. Hang on just a minute for me. Give me a sec, I'll be right back. Sorry about that, you guys. All right, normally I don't get up during these recordings, but I had to. My wife was on the phone. I think it was... my mic was picking it up. Anyways, so we've heard about this. We know exactly what's going on with Kraken, right? The next thing that you really need to know, like, just to reiterate, all right, be careful. I recommend no leverage trading because of this. I think that you are putting yourself at massive, massive risk. Even if you can do well with these percentages, that's fine. But you're just putting yourself at very massive risk by doing this. So I want you to be careful about it. Okay, the next thing we're going to talk about is recovery. Now, let's say that this is another risk that you need to be aware of, okay? With leverage trading, let's say you're down, let's say you put in $10,000, okay? Now, you make a trade and you lose 50%. So you're down 50%. This means you have $5,000 left. Now, the mistake that most people make is that, oh, all I need to do is make another trade and go up 50% and I'll gain it back. No. You need to keep this in mind too with leverage trading. And this is with most trading, right? If you're down 50% on a trade, in order to just get back to your original $10,000 that you invested, you now have to go up 100%. This will gain $5,000. Right? You'll gain $5,000 because you have $5,000 left. You're up 100%. That gains you $5,000. This brings you back to even. Now, keep in mind, this doesn't cover fees. So whatever fees you're paying, you have to make those up as well. So remember this fact, okay? Whatever you lose, you have to make double that amount normally to get back your earnings. If you lose 5%, if you want to gain that back, now you have to be up 10% to gain back that 5% loss. You lose, you lose 100%, right? And then you put in more money. Now it goes even higher. You have to gain way more than 100% to gain back your initial trade. So this is why people lose a lot when they start losing in leverage trading, because once you start going down, it's very hard to recover. And most people don't want to let go of their crypto. So if you're doing leverage trading with Bitcoin, people don't like losing their Bitcoin, because Bitcoin is going up in value over time, and it's going to likely continue to go up in value, a lot more value over time. So if someone loses one Bitcoin, they want to make it back. And then what they'll do is they'll put in another Bitcoin and try to earn it back. But now they have to double that one Bitcoin just to make up what they've lost and then to get into any profit. Whereas if you had just taken that Bitcoin and you had just held it, you would probably make so much more over time. So unless you're the best trader on earth, normally you're not going to do too well with leverage trading, and most people don't. Only people that have a lot of practice do well, and if you're going to practice, use my recommendation from earlier. Only do leverage trading with small amounts and try to never go above 10x. Leave yourself a little bit of room, so if you don't do well, you can pull out and you can just hold your assets, right? Don't risk it. So that's my recommendation for you. I hope that you guys listen to that. I hope that you guys liked the information you got today. This is really one of the biggest. Now, there's many other dangers of leverage trading, but for the purposes of this video, I wanted it to be focused on crypto. And I wanted it to be focused on the one thing that most people don't talk about, and that is just server or technical issues with an exchange. Okay, that's the biggest risk. Right? If you're going on 100x leverage, then, a 1% drop, you lose everything. So that's a pretty big risk, but that's your own stupidity if you're trading with 100x leverage. So for anyone who wants to, trade with leverage, just make sure you do a lot of reading about it and make sure you're prepared. And make sure you go on to the Kraken Flash Crash subreddit and you read all these stories, because I'm telling you, there's a lot more than what I highlighted and went over for you. There's a ton of stories about this, and it is a very, very dangerous thing to do. My recommendation, do not trade on leverage. If you do, you're really risking to lose. Most people are going to end up doing it with Bitcoin, and you're really going to end up wishing that you had held that Bitcoin when time goes on, and it's worth a lot more than it is today. So be very careful with your Bitcoin. It's very valuable, and you need to hang on to it. You need to do whatever you can to hold on to it, because one day it is going to be worth a lot more than it is today. All right, that's it for today. We might do another video on this at some point in the future, but for now, I think this is sufficient, and it gives you something to think about. So think about it, and give me your feedback down below, okay? Have a great one. Bye.